All right. Hello, everyone, and welcome. I'm Therese Bacon, Financial Education Specialist and lead of the Seminar Series program. We're so glad that you could all join us this evening. These sessions are designed to give you practical, relatable financial education that helps you feel more confident in navigating your money. We have a wide range of presentations planned throughout the year, and you can explore any upcoming topics or register for them by visiting msufcu.org/events. Today's event is also being recorded, and you'll be able to rewatch it or share it by visiting youtube.com/msufcu and then select the seminar series playlist from that menu. So we're very excited this evening to have Laura Cantu, Deposit Operations Manager, here to walk us through today's topic, navigating trust accounts. Trust can feel a bit complicated sometimes, so today's session is designed to help provide a practical understanding of how trust accounts work here at the credit union, common questions that we receive, documentation requirements, and helpful resources available to you as a member. Laura will be covering quite a bit of information today, so to help us stay on schedule, we'll go ahead and save questions for the Q&A portion at the end of the presentation, but please use that Q&A feature at the bottom of your Zoom screen to submit your questions as they arise, and then we'll go ahead and address those once the presentation concludes. All right, so with that, I just want to thank Laura for being here again with us this evening, and I'll go ahead and turn it over to you.
Thank you so much, Therese. I'm delighted to be here tonight and with all of you. I do want to start with a quick disclaimer. The information that we are providing this evening is for informational purposes only and should not be construed as tax or legal advice. The information we are providing is specific to MSU FCU accounts, so there may be some differing opinions or thoughts that are shared with you from your family or your friends. So just keep in mind that this information is MSU FCU specific. So with that, we will go ahead and get started on navigating trust accounts. Okay, so we've got a couple of topics we are going to cover this evening. So we're going to cover some key concepts about trusts. We're going to go through the common trust types, how they work, required documentation and account management, and finally, some additional resources that you may find helpful. So starting at its most basic, what is a trust? So a trust is a legal agreement that holds and manages assets for someone's benefit. And what it also does is it's designed to detail what happens to your money, both now and in the future. And when we think about assets, assets can be a lot of things. They can be physical assets, such as a home or bank accounts, investments, jewelry, things that sometimes are intangible, like funds, or the tangible things which are not necessarily put in a trust, but we'll get to a little bit later. So when a trust is designed, the person who creates it is called the grantor. So they're the ones that set the trust up. They're the ones that also put the assets in it. And in many cases, they're also the trustee or the individual responsible for managing the funds of the trust. A trustee can be the person who manages the trust account according to the documentation. And sometimes the original trustee may not be the trustee that continues on after things change and progress, and a successor trustee will take over if the original trustee cannot act or if they pass away. And then the beneficiary is the individual who benefits from or receives money from the trust. So why do people use trusts? Well, there's quite a few reasons. One of the biggest reasons is after somebody passes away, many times their family goes through a process called probate. And that is where a court will decide how the funds in someone's estate are distributed. And this process can be time consuming and it can be expensive. And so a trust will help to avoid that process entirely. It also instructs the family and whomever is left on clear instructions on how funds are to be distributed. So it prevents from being confusion or reasons that money gets distributed in a way that the grantor does not want. It also provides more control and privacy. Probate is a public it can be on a public forum, so that information is publicly available, whereas a trust does not permit any information from being shared with the public. And finally, And I think maybe most importantly, it provides simplification for the family members of the individual who is establishing the trust. In many cases, there's a lot to manage and to deal with after the loss of a loved one, and having a trust helps to simplify that process. So there are two different types of trusts that MSU-FCU typically sees. That doesn't mean that those are the only two that we accept. However, those are the most two common. So we've got a couple of different sections here. The most common trusts are specialized trusts and trusts that are not accepted. So I'll kind of walk through those at a high level, and then we'll go into a little bit more detail. So we most commonly see revocable and irrevocable trusts. A revocable trust is one that can be changed or modified. An irrevocable trust is just the opposite. It cannot be generally changed or modified after it is created. We also see quite a few special needs trusts. A special needs trust is designed to benefit an individual that typically has some sort of physical or mental disability and has care needs and needs for funds to be set aside for their own purposes. And so those trusts can be established by a family member, typically by parents. Now, we do have a few trusts that we do not permit, and those include business trusts, investment trusts, charitable trusts, or a trust that names a financial institution to act as the trustee of the trust. Because those have various complications, we have chosen not to accept those types of trusts here at MSU-FCU. So talking about the most common types of trusts that we see, by far the most common is the revocable trust. A revocable trust is one that allows for changes to be made. So just like in our lives, things come and go, people come and go out of our lives, things change. And so a revocable trust can be changed or ended by the grantor at any point in time. The grantor, in most cases, also serves as the trustee. So many times I create my own trust, I continue to act and to manage my own funds, and that is extremely typical. It is the most common type of trust that is created for the purpose of estate planning, and it offers flexibility. So as I mentioned, things change sometimes. Maybe a couple sets up a trust and then they divorce. And so being able to revoke or to modify that provides some flexibility that would otherwise not be available in, for example, an irrevocable trust, which we'll talk about next. Irrevocable trusts, as I said, cannot be changed typically after they are executed. And again, that is usually the case in a special needs trust where it is set up for a family member who may have a disability and needs to have funds provided to them or for their care. So those typically do not get changed. Now, assets typically in these cases no longer belong to the grantor, meaning that they are for someone else's benefit. So the funds are traditionally given to another individual or for their benefit. These are often used for tax planning or asset protection, meaning that in some cases, we will see situations where an individual is applying for specific types of benefits, and those benefits their income cannot exceed a specific amount. And so sometimes an irrevocable special needs trust is designed for that type of individual and that type of situation. And then most commonly, we see irrevocable trusts when all grantors of a trust have passed away. So once that happens, no one is allowed any longer to make any changes, and therefore the trust cannot be changed at that point in time. So with a trust, how do we define ownership? So who owns the trust account? So the trust itself is essentially a separate business entity, if you will. It has its own legal entity, meaning that the assets that are within the confines of the trust are owned by the trust and are for the benefit of that individual who is named as the beneficiary. So that means that there's different tax reporting for trust accounts. That means that the assets in the trust are protected. So the trust itself owns the funds in the account, and the trustees act on its behalf. So when we think about the authority of the trust, so what are the things that the trustees can do and what powers do they have? So MSU FCU has to follow the written trust instructions exactly as they're written. And we do a thorough review, pardon me, of the trust document upon receipt. So that means that we go through and we verify what powers are permitted for the trustee to do within the confines of the trust. So the trust document tells us several things. It tells us who can access the account, and it also tells what actions the trustees are allowed or not allowed to do. So one of the big things that we always talk about with trust accounts is how does the trust, because remember, I mentioned a moment ago that the trust itself is its own entity. So what that means is that the trust itself has to qualify to be a member of the credit union. So we are a federally chartered credit union. And what that means is that we are a membership-based organization. And all accounts and all account holders have to qualify for membership. So when an individual is opening a brand new trust account that we've never had at the credit union, they have to qualify for membership. There are two ways to do that. These are told to us by the NCUA and by the Federal Credit Union Act. So the first way is that the grantor must be a member of the credit union. So if my spouse and I both have a membership of the credit union and we set up a trust account, we're both grantors, the trust can be a member. So that meets the qualification right there. So the challenge, however, is if we have a trust that is brought to us and all the grantors are deceased, we unfortunately cannot qualify through the first option, which is the grantor becoming a member of the credit union. So therefore, all trust beneficiaries must qualify for and maintain membership with the credit union. So I'm sure you're thinking that is kind of complicated, and you're absolutely right. Now, we get a lot of questions about this topic. And one of the main questions is, well, this credit union or this bank doesn't require that. And you're right, they may not require that, but they are also not bound by the rules of a federally chartered credit union. So in order for us to stay within our compliance requirements and regulations, we do have to follow this. So what that means is we will help you to determine what route you need to go and how the trust can qualify. I will also point out that if a trust account is here at the credit union and has been for many, many years, you don't need to worry about qualifying your trust. So once we have it on deposit and we've already qualified it, you don't need to worry about that going forward. This is, again, in the case of a new trust to the credit union. So I just want to be really clear on that because we had quite a few questions at our last in-person trust presentation. So I wanted to make sure that that was clearly understood. So required documents. So when a new trust is being brought to MSU FCU, we need to know some information about it. One, we need to have a copy of the trust document. And as I mentioned, we go through it and we verify that all the pieces that we need to see are included in the body of the trust or in the certificate of trust. So that would include the name of the trust, which is the legally binding name. We need to know when it was created. We need to know the people involved. So we need to know who are the grantors, who are the trustees, who are the successor trustees, so the person who would act on behalf of the trust if all successors are either unwilling or unable or deceased to act, and then who the beneficiaries receiving those funds ultimately are. And then we also need to know what powers the trustee has. And then we ask for a certificate of trust. A certificate of trust is simply a summary of the trust. It usually is 1 to 2 pages. It's very short. But what it does is it kind of gives the highlights, if you will, of the larger trust document. It is in Michigan always required to be notarized. And as an alternative, you can provide your attorney prepared certificate, but MSU FCU also has a certificate of trust if your attorney did not provide one to you. And then finally, we do need some additional information, and that is mainly for the purpose of tax reporting and for opening the account here at the credit union. So we would need either the trust's social security number or employer identification number or EIN. So many people opt to use their personal social security number. So if I'm a grantor and I would like any dividends to be reported to the IRS in my name or in my social security number, that's very, very common. And in some cases, though, if the trust is for a special needs situation, or once it becomes irrevocable, we do require the IRS to provide an EIN to you so that we can report that separately, because the trust needs to report under its own tax identification number at that point. And then finally, we would need a trust application that would be completed for the credit union. And that would outline the names of the trustees, and they would sign the document for us. So we have a legally binding agreement. Okay, so this is probably one of the more complicated concepts within this presentation. So I want to take a few minutes to walk through the combination of questions we get most frequently is, I have a power of attorney and I have a trust. How do those two things work together? So we see these hand in hand a lot. So usually somebody brings in all the documents that their attorney has provided to them. They go and they set up a power of attorney and a trust and a will, and they bring all their documents in a big binder, and they say, here's everything. What do I do with all of this? And they know that they want to open a trust account. And so we first of all find out, what do you want to accomplish? And so sometimes we want there to be a power of attorney that can act as a trustee on the trust. But that can be a little bit challenging, because for MSU FCU, we do need to have information where the trust and the power of attorney essentially speak to one another. They have to refer to each other in order for us to be able to allow someone to act in a fiduciary capacity as a trustee on your trust. So let me go over a couple of the details here. So the power of attorney must specifically state the name and the agent on the trust. And then the trust document must also allow for a power of attorney agent to act as a trustee. So the trust document and the power of attorney documents must clearly support each other. And many times, unfortunately, that language is not included. So the documents, if that is what you really want, may need to be updated by an attorney. So we see this a lot where the power of attorney is asked to be added at a later time. So maybe adults, like adult children, are coming forward to help their parents. And so sometimes they want to be able to act on the trust, but they're not currently trustees. So that's where a power of attorney might come in. But again, we need to look at those specifically to see how they are written. And again, sometimes we are unable to proceed with that, and other times the documentation is perfect and it gives us all the things that we need. But a lot of times we will find that the successor trustees and the power of attorney agent are the same. So there's lots of things that we can do, and we will be able to give you guidance on those specific situations. But this is a very common question that we get on a regular basis. Okay. So we also get the question all the time. So if I don't want to set up a trust account, but I have a trust and I would like to name it as beneficiary on my account, how do I do that? Well, we definitely encourage people through their estate planning processing to consider a beneficiary designation in lieu of other options. So a beneficiary designation at MSU FCU does supersede any sort of court documentation or other instructions. So if you put a person or a family member or a friend as a beneficiary on your account here at the credit union, they will get the money. So we communicate with them upon learning of a member's death. We let them know they are a beneficiary, and we let them know how to claim their funds. Well, in many cases, a family would like to add their trust as beneficiary. So we certainly can do that. We have a beneficiary designation form that can either be filled out in person, or we have an electronic version that you can sign via the DocuSign process, where you can fill that out electronically and send it back to us, and we update your account accordingly. So you would fill in all of the sections there that have an asterisk next to it. Those are all required fields to complete, including the social security number. So if you send that back without that information or the entire form completed, we will return it to you and ask you to fill it out entirely. but that would allow you to have the option of naming your trust as beneficiary. Now, one thing we do like to add is that if successor trustee information can also be provided to us, that makes the process much, much better, because we don't have, in many cases, that detail if we're just learning the name of the trust. There's no database out there that tells us that, your daughter or your son is your successor trustee. So if you can provide or furnish a copy of that information to us, that will help us tremendously in ensuring that your trust receives the funds that it is entitled to, and that we're able to communicate with your family member accordingly. Oh, and here it's filling it all in for us. So as you can see, you would simply fill out the name of your trust. The phone number should match the grantor or the trustee's phone number. The address should also match what's on the certificate of trust. We always use trust as the relationship. The date of birth field would be the date that the trust was established, which would be listed on your trust documentation. And then the EIN or social security number can be input. We can accept all zeros for this, but if you are reporting the trust under your social security number or an EIN, that's very helpful information. Okay, so moving on to talking a little bit about successor trustees. So a successor trustee would only come in under two circumstances. It would be triggered either by the death of all grantors or the grantor's incapacity. So we see this a lot. So something happens, we have seen, unfortunately, a lot of cognitive decline, and a grantor or a trustee is no longer able to make financial decisions, and a physician has certified that information. And so when we are determining whether or not someone has reached a point of incapacity, we usually will determine that by two physician letters with an updated certificate of trust. And if we are maintaining the account at that point, we would need a new application to tell us who the new trustee is. We request their signature on file and their information so we can verify their identity. Now, if the successor trustee is going into place because of the death of the grantors, we do require a death certificate of the deceased individual. We would require an updated certificate of trust to inform us that that individual has passed away, and the names of the new successors. And if you are keeping the account with the credit union and continuing to use it and to manage the funds in the account, we would again require a new trust application. Okay, so after the account is open, so we've gone through the process, we reviewed all your documentation, everything looks great, got your application, and we get your trust account set up in our system. So the good news is this account works exactly like any other MSU-FCU account. You have all of the same services that you enjoy with your regular base accounts here at the credit union, including online banking and bill payments and all of our various savings products. So as you can see, you can have all kinds of accounts here at the credit union with your trust as the owner of the funds. So you can have a savings builder, you can have a money management account, you can have certificates. So there's lots of options. So you're not locked into anything or out of anything. The one caveat I will say is we only allow one type of loan on a trust account, and that is a real estate-based loan. So if you have a trust and your home is deeded in your trust, then you are allowed to have a mortgage or a home equity loan with a trust. So this image is actually slightly untrue because you cannot have a Visa. We can't open a new credit card with a trust account. So I will caveat that by saying that. But you will have to have a base account with the credit union so you can have your Visa on your base account. So when these accounts are open, only the trustees can access the funds. So unlike other accounts where you can add a joint party to your account anytime, trust accounts don't work like that. Only the people named in the trust documentation can have access to the account. Now, one of the big questions that we get very frequently is, hey, I got a check made payable to my trust. How do I negotiate it? Well, it has to go into a trust account that is named the same way that the check is made payable. So if you receive, let's say that you sell your home and your home was deeded in your trust and you get a large check made payable to the John Doe Trust, it has to go into an account with that same name. It cannot be deposited to your personal account. So many times, the question we will ask our members is, do you intend to get checks made payable to your trust? And if so, the opening a trust account is the correct direction to guide you in. If you never receive a check made payable to your trust and you have no intention of that, in many cases, that is when a trust as a beneficiary could be a viable option. But we always will ask, how do you plan to use the account? Do you expect to get checks made payable to your trust? And if so, a trust account is definitely the right direction. Okay, so we do have a couple of things we want to share at the end. We're going to show you, as we finalize our presentation, where you can find our trust application and some of the other resources on our website. This is a screenshot of our page, so we'll get to that in just a moment. But we are very excited to introduce to you a new product that we recently rolled out to our membership. And when you are on our website under the services tile, we recently updated our website, by the way. So if you haven't navigated our site in a while, you might see some new features. Under estate planning tools, you will see the TruStage Digital Estate Kit. We are very excited about this product, and I can't wait to tell you all about it. Okay. So the reason that we partnered with TruStage, they are a very trusted partner of ours anyway. They help us with many of our products and services that we offer to our membership. But what we were really looking for was an affordable, easy to use, and self-service platform that we could direct our members to one, create legal documents, but also to have some control over how they are setting up the documents that they need for their futures, for their families. And so we came across this product. So this is a website that you pass through as you go to our website. You would create an account with TruStage, and it allows you to pick the plan you would like. So if you want to set up a trust, a will, a power of attorney, sometimes that process can feel really overwhelming. Knowing that you need to make an appointment to see an attorney, the cost involved, the time. And honestly, a lot of people don't even know where to begin with that. How much do I need? Like, does it have to be a super long document? Can it be kind of short? Do I have kids? So there's a lot of things to consider. So I do want to preface this by saying this isn't for everybody. If you personally have a very complex set of assets and liabilities, and you've got a lot of money and you've got a lot of things going on in property, this may not be your best option. So this is really designed for, the basic, let's get started, let me get something going. What I really like about it is, I think about a lot of young people, and unfortunately, my department oversees all of the accounts where we are notified of the death of a member. And many times it is people a lot younger than we would like to think. And a lot of times they haven't gotten to the point of setting up a will or a trust or something to help guide their family after the inevitable happens. And so it can be very painful and time consuming and hard to try to figure out, what did that person even have, let alone what do they want me to do with their assets. So this is a tool that helps families feel prepared. It provides educational videos and quizzes. And it's really easy to use. Now, the best part, and I'll get to that in just a second, is that it is very affordable. So this kit is being brought to you for a one-time cost of $199, and it would be a $36 per year annual fee to maintain the services within the digital estate kit. Now, if you think about the cost of going to an attorney, you probably would not be able to do so for $199. let alone to walk away with executed, legally binding documents. So again, this is not for everybody. So I do want to be very clear about that. So what this document allows, or this process allows you to do, is to go in and you basically set up a profile, and you would add your family members, you'd add your relatives, you would put all the institutions where your funds are held, and then you can set up a simple trust. You can set up a simple will. You can set up a power of attorney document. You can assign roles to various situations. So you can see that you can nominate an executor for your estate. You can nominate a financial, a power of attorney. You can nominate a health proxy or a representative for different situations. So this just gives you that power and that freedom to be able to do this on your own. It's very easy to use. I did set one up personally because I felt like I wanted to make sure I could share, the ease with which I was able to go through this process. At the end, you are provided with your documents. You can print them out. You do need to have them notarized so that they are fully legally executed, but you can take those to any financial institution or share them with your family. And again, it provides that peace of mind that comes with knowing that you did something to prepare your family and maybe set them up for a little bit less frustration or challenge when those circumstances arise and times are really, tough and there's a lot to do. I also love the fact that there are some very easy to do quizzes and little bits of information that are designed for the layperson. So, for example, I played around with Bob died without a will. Now what? So those are some of the questions that sometimes you think you want information about, but you're like, how do I go about getting that? That's what I really love about this platform. It gives accessible and clear information that you can really use. So let's recap a little bit. So our concept checklist. So most importantly, trusts are really designed to help protect assets and your loved ones so that they know exactly what your wishes are and they know exactly to whom the funds will belong after the death of the grantors. The trustees are responsible for being a fiduciary, if it's not the grantors themselves, acting in the best interest of those funds, managing them according to the written instruction. Preparing early is always the best bet, helps to avoid stress later when things get complicated. And the last thing you want to do is try to figure out all of these pieces. And finally, we can help explain all the account requirements. This is a lot to take in. I recognize that. My department, Deposit Operations, is responsible for the establishment of all specialized account types outside of general base accounts and children's accounts. We do everything else. So if you are interested in establishing a new trust account with MSU-FCU, you're going to be routed to my department. And my team of experts will be happy to go through, review your documentation, answer all of your questions, and help you get an account set up probably within about 20 to 30 minutes. So one thing we cannot do, however, is provide legal advice. So if you do have specific legal questions about your situation, we would absolutely recommend that you seek some legal advice to be able to navigate those questions for you. But as it relates to the explanation of how to set it up here at MSU-FCU, my team has got you. So that concludes our presentation. Thank you so much for your time and for listening. We are going to open it up to questions. So I'm going to hand it back over to Therese, and she will help navigate those questions.
Yes, thank you very much. And I see that we forgot to put our QR code for our survey in there, but when you close out of the Zoom, a short survey will pop up. So go ahead and take that then, but sorry, it's not on that slide. But yes, we do have a couple questions here that came through. First one is, when designating my trust as the beneficiary of my MSU-FCU accounts, must I designate the account as either TOD or POD, so transferable on death, payable upon death? And if so, does that matter? So do they have to make a special type of designation there?
Definitely not. So when we receive a beneficiary designation that has the trust listed, it automatically is implied that it is payable upon death. So when what would happen is we would, if we have the successor information on file, which would be extremely helpful, we would contact the successor trustee to inform them that we've been made aware of the death of the final trustee or the grantor, and that we would like to share with them how to go about claiming the funds. And so in that case, we would make a check payable to the trust. Even better if you have a trust account here too. But we would make a check payable to the trust, and the successor trustee would be able to either take that to another institution, or if they prefer, they can leave it here.
All right, next question. At what age should a young person have a trust?
Well, that is a very good question. Honestly, it really depends on your specific needs. So if an individual feels like they would like to ensure that their funds are distributed according to their wishes, there's really no age, either too young or too old, to make that determination. Many times people say, well, I don't have a lot of money. It doesn't matter, honestly. It really is about the execution of where you want those funds to go and who you want to manage your funds. So it really doesn't matter if you have $10 or if you have $1 million. You can put your funds in a trust anytime you want at any age.
Oh, and then another good question. What's the difference between a will and a trust?
Excellent question. So we get this a lot. So people will say, oh, I have a will. And that is fantastic. A will, however, does not provide for the actual management of the funds until after the death of the person who established the will. So a will outlines mainly tangible items. So I want my family member to have, my book collection or my jewelry or my, furniture. So those are the more tangible things. When it comes to a will has to be presented to a probate court, and the court will then decide, once it's been reviewed, who gets to have the funds that are left in the will. So they go through a process of reviewing it and certifying it. Only then would those funds be distributable. With a trust, the money stays in the trust even after the death of the grantors. There's absolutely no movement of the money. There's no court intervention of any kind. So it really prevents the probate process from entering into the touching of those assets.
Okay, thank you.
Wills are a good idea. If you do die without a will or a trust or anything else, and you don't have beneficiaries on your account, a family member or friend would need to come forward and request to be your legal representative after your death. And at that point, without those documents in place, the state of Michigan, and we're only speaking about the state of Michigan here, would determine by something called intestate succession, which is basically a list of family members and the order in which who would receive the money. So the court would make that determination. So if you prefer to have it all outlined according to your own specifications, that is where those documents will come in handy and your wishes will be granted.
Okay. All right, here's a good one too. I live in Illinois and have a revocable trust account with MSU-FCU. Does the interstate issue make a difference?
So I will say each state has very specific and different laws. We in our department do a lot of research on the varying state-by-state laws. However, if your trust has already been established with the credit union and we've got documentation, we will simply distribute the funds to your successor trustee upon your death. And it is actually up to them to distribute the trust funds based on how you have made those requests. So none of the interstate succession plays any part in that. So it literally will go to the people that you have designated specifically.
Okay, good to know. Okay, next question here. This person, they said their house will be sold after death and those funds will go to a trust. Other than that, they don't expect any other checks payable to the trust. Should I set up a trust account now?
Well, that's a very good question. So when your home sells, the funds have to go somewhere. And if your home is deeded in a trust, the title company has to make the check payable to the trust. So you're going to want your family member to have a place to put it. That is up to you if you want to do it before or after death. If it is done after death and it is being opened at a federally chartered credit union, and the trust is not already established, then it may make it more complicated. Now, I can't speak for banks or other types of credit unions because there are state chartered credit unions that have different requirements. But I would say if you want to pre-plan, doing it before death is always better than doing it after the fact.
Okay. If you don't have a will or trust, but do list family members as beneficiaries, will the funds be distributed to them without any legal issues?
Absolutely. So MSU FCU has an obligation to you as the account holder. So when you set up a beneficiary designation, as long as the document was signed and it's valid and we have no reason to believe the signatures are not valid, then we will honor your request and we will give the funds to the primary beneficiaries that you have designated. So the way it works is you have the ability to put in beneficiaries, and then we also have something called contingent beneficiaries. Very rarely do we have to go to the contingent level, but sometimes if all beneficiaries have unfortunately died, then if there's a contingent, then we will give those funds to that individual. Now, if there's no one left, and if you do not designate a beneficiary, those funds are owned by your estate. And then we would have to go through the estate route in order for those funds to be claimed.
Okay. All right. And yes, on that beneficiary note, if you haven't checked your beneficiaries in a while, because that's not something you can see within Computerline. If you are a member with us, definitely reach out to us. We can always, resend you that form if you want to update those. And Laura's team will help you with that. But always a good idea. I think, as we've done these estate planning seminars and webinars, I think a lot of our members, that's come to top of mind for them. And they've realized that maybe they haven't checked on that in a while. So good reminder, definitely. All right. Oh, here we go. Another question. Does MSUFCU accept what's in a will?
So technically, until the will is probated and the information is determined to be valid by a probate court, what typically happens after that is that a personal representative is appointed, meaning that a legal representative for your estate is being appointed by a probate court. So unfortunately, the will doesn't really do us any good. It doesn't actually give us any legal direction to follow. So until we receive letters of authority for the personal representative of an estate, we can't do anything with the will. So it really isn't relevant for the purposes of the credit union. Okay, but it's great to have. It's good to have. It just doesn't have any bearing on us being able to speak to a family member after your death until we get letters of authority.
Okay. All right. Don't see that any other questions have came through, but I know sometimes people are typing for a moment. So we'll give everyone a second to submit those questions if you do still have some. But in the meantime, I did also want to highlight some upcoming webinars that we have going on. So Wednesday, July 15th will be on the topic of advocate for your wallet. So, how to keep your money safe, how to make your money earn a little more if it is just sitting there. So that will kind of help you guide you through that, advocate for your wallet on July 15th. And then on Wednesday, July 22nd, we're going back to the fundamentals of budgeting. And, it's a very important topic in this economy and this time. So definitely always a good topic, building your best budget. We'd love to see you guys at those upcoming webinars. And we did have another question come through here, Laura. So let me grab that.
All right. And okay. Teresa, are we able to after that, will we be able to show them the website so we can highlight where the trust applications are located?
Yes. So I did put that in the chat for everyone. If you just want to bring up open the chat within Zoom, there will be a link in there. I did post that when you were on that slide, Laura. So yep, the trust application link, as well as the estate planning kit link. And I'll go ahead and grab those out of the chat and post them again before we disconnect here. But here's that last question. If I have two beneficiaries listed, one is my significant other and one is my adult child, can I designate a contingency for my significant other, his adult child?
So you can do it however you want. So We do always take the primary beneficiaries first. So if you want to leave your significant other and your adult daughter or son as your beneficiary, absolutely. And you can always name a contingent. Just again, keep in mind that that would only be in place once all primary beneficiaries are deceased. So again, it doesn't happen very often, but we have seen it. But yes, you can name whomever you want. And as Teresa mentioned before, it is always a great idea to ask us who your beneficiaries are. We have had many situations where, especially being MSU FCU, we are a university-based credit union, and we have many individuals that set up their accounts when they're in college, and they name a beneficiary kind of at that particular time. And as time goes on, they may have changes in their lives, or they forget that they had a beneficiary and they name someone from their past. Or if there's a life change and you maybe get divorced, or a parent is left and they pass away. So we do see a lot of that. And we do want to encourage you to keep current on your beneficiary designations so that you are able to be in control of that information. Also, if your beneficiary has had a name change, so if they have a different last name, sometimes that's helpful to provide us an update. Or again, if you say, I'm going to make some changes to my account. There's actually one thing I did want to mention. Let's say that you have an account and you want to add your adult child to it. If you had a beneficiary designation before that, we do void those when any new person is added to an account. And the reason we do that is because all parties on the account must agree on who the beneficiary of the funds go to. So we want to make sure that if you are making a change and adding a party to your account, that you are informed that the beneficiary designations that were previously held would be voided with that change. And we'd ask you to update that form and complete a new one if you want to. And I do want to be clear, you do not have to have a beneficiary on your account. If you don't want to, you absolutely do not need to. So I don't want you to think, that you have to. You absolutely don't. And some people choose not to.
Okay. But definitely having one of those other options already set up would still make the process easier for sure.
Absolutely.
All right. And then a few more questions here. Will this presentation be available for viewing later? Yes, it will. Yeah. After tonight, after we stop recording here, I'll let it process, I'll save it, and we'll get it uploaded to the YouTube channel by tomorrow. So you just have to search MSU-FCU YouTube, and then there'll be a seminar series playlist there. So that will be up tomorrow, so you guys can access that. And then in the follow-up email from Zoom that you'll get tomorrow as well, that information will be in there also. So just want to let you know that. Okay, and then that person that you that asked about the will, they had a follow-up question. Does your answer to the wills question, does that mean that you do not accept pour-over wills?
Actually, we do. So those are kind of on a case-by-case basis. So what they are talking about, what a pour-over clause is a pour-over is a part of a will that basically says that any residue that was not included in my trust. So when I say residue, I mean, if I forgot to add an account. So let's say that I've got a trust. I put all my accounts in my trust account. I've got all my money there, but I forgot that I had that one account at that other place, and I failed to put that into my trust. So that account is not considered trust assets. But what they're talking about is a special legal clause that can be written in. And what it says is that any money that I forgot to add actually is owned by my trust. Now, in order for us to accept that and to allow for those funds to be part of the pour over, the will does have to be probated, meaning that a court has to certify it. That doesn't mean that we need a personal rep or anything like that, but we do need to know that the probate court has reviewed it, they've accepted it, and that nobody else is contesting the will. So yes, we do accept pour over clauses. They are on a case-by-case basis, so my department would review it. I'd probably have some eyes on it just to make sure everything's where it needs to be. But yes, we definitely are familiar with pour-over clauses, and we have accepted them.
All right, sounds good. This is another good one. You guys have some great questions tonight, but can someone under 18 years of age be a beneficiary?
Absolutely. So there's a couple of things with that. So many times a trust is written where it states that the beneficiaries of a trust need to reach the age of majority, meaning 18, before they are issued the disbursement of the funds in their trust. So that is up to the successor trustee to disperse those funds as it is instructed in the document. So that may be that the successor trustee leaves that money there for many years or several years until that person reaches the appropriate age, and then those funds would be distributed. But again, we don't really police how the funds are distributed. That's up to the successor trustee. All we do is we house the account. That's kind of where the credit union's liability and responsibility ends. We're not responsible for monitoring transactions, or how you use the account, as long as there's not fraud, obviously. But as far as the distributions, that is 100% the successor trustee's responsibility to carry out.
Hey. Well, I think that wraps up all of our questions. So thanks everyone for being so interactive with us and having all these great questions. Laura, you always do such a great job at explaining these sometimes pretty complicated topics in such a approachable way. So we really appreciate always having you with us for these webinars.
My pleasure.
Yeah. Okay, well, I think that's it. We can kind of wrap up here. So thank you all once again for being with us. As I said before, when you close out of the Zoom, a short survey will pop up. It's just a couple questions, but we'd love to get your feedback on tonight's session and some ideas for any, topics that you guys want us to touch on in the future. So this is why we're here, and we want to give you, some relatable, advice on things that, can help make your financial life a little bit easier. So all right, everyone. Well, thanks again, Laura, and we will see y'all soon. Have a good night.
Thank you.
All right. Bye, everyone.